Every year in Norway, thousands of people try to start their own business. Some have a vision, some are tired of being employees, some just want to build something real. But there's a reason why most of them don't make it. Over 50% of startups in Norway fail within 5 years. Not because of bad ideas, not because people didn't work hard, but because they run out of money fast. And what most people don't realize is, there is actually a lot of money out there. Billions of kroner in grants and loans available right now. But it's locked behind rules, paperwork, and systems your fancy neighbors will never tell you about. So ask yourself, how many years have you wasted struggling, while others quietly use the same money to leap ahead? In this video, we are breaking it open, where the money really is, who qualifies, and how can you actually get funded, even if you are just getting started. Let's go. Norway has always been a land of builders, from Viking traders pulling silver to cross oceans, to today's founders pitching bold ideas for green tech and AI solutions. It's always been about courage and capital. Back then, the map was carved on wood. Today, it's digital. The sword is your business plan, and your shield, knowing how to navigate banks, grants, and funding with strategy. Before we talk about where the money is, let's talk about how to set up your business right. In Norway, structure matters more than you think. And to gain the respect of any bank or grant office, your business structure has to be in place. In Norway, there are 3 main types, and the one you choose directly affects your chances of getting approved. Let's start with the AS. The AS is the most trusted option for serious businesses looking to grow and protect their personal assets. This is the Norwegian version of a limited liability company, meaning the company is its own legal entity, separate from you. If the business fails, your personal assets are protected, which is exactly why banks and investors trust this structure the most. This specific structure provides you the most leverage, especially if you plan to grow or seek substantial funding.
Now what?
Let's move to a structure that is faster to set up, but comes with higher personal risk. The EEA. This option is the simplest and the fastest structure, but also the riskiest. See, here you are the business. There is no legal separation between your business and your personal finance. If something goes wrong, you are personally liable for any debts or obligations. Though it's great for small projects or freelancers, but if you're trying to scale or borrow big money, banks get cautious. Next up, for those entering Norway from abroad, they're the third option, the NUF. This option obviously is for foreign companies willing to operate in Norway. Easy to start, but often viewed with caution by lenders. You don't need share capital and the process is straightforward, but banks often hesitate unless the parent company has a proven track record. Choose the wrong structure and you'll be 2 steps behind before you even apply. Once your business is properly structured, the next step is knowing where to access capital. These are 5 of the most important funding sources in Norway, each with a different role, pace, and purpose. Before we dive in, here is something you need to understand. There are 2 main types of loans, secured and unsecured. A secured loan requires you to offer something valuable as collateral, like a car, equipment, or property. If you can't pay, the lender can take that asset. An unsecured loan doesn't require collateral. The risk is higher for the bank, so approval depends more on your credit score and your plan. Let's begin with the most established name in Norwegian business finance, DNP. DNP is the heavyweight lender for businesses ready to grow. DNP offers loans from 100k to 15 million kroner. Interest between 4 and 8%. Approval based on collateral or a personal guarantee. A personal guarantee means if your business can't repay the loan, you will. But if you got an AS, financial projections, and a solid business plan, you move from risky to reliable. That's the power of preparation, up against the national heavyweight. However, if your strength lies in your local roots, that's where Sparebank 1 comes in. They support local businesses, especially outside big cities. Loans up to 16 million kroner, interest from 4 to 7%, and it has a strong support for community-based businesses. So if your business creates local jobs or serve a regional need, Sparebank 1 might be your best ally. Need funding? Without putting assets on the line, let's talk about Nordea, a bank built for speed. Nordea is one of the best for fast and secured loans that goes up to 280k kroner. No collateral required. Approval often within 48 hours. Slightly higher interest due to the risk. Nordea often backs new businesses, even with zero revenue. Of course, if your plan is strong and your numbers are clear. But if you want pure speed and simplicity, even faster than Nordea, Qred is a category of its own. A fully digital bank with no branches, no red tape, just rapid decisions, all online. It's ideal for short-term needs and rapid decisions. Loans from 50k to 5 million kroner. Approval in under 24 hours. And while the interest is between 8 and 15%, it requires a personal guarantee. And finally, if you are building something truly innovative and you are after free money, this is where you need to look. Innovation Norway. Innovation Norway is the national grant authority and the go-to for businesses focused on innovation, tech, and export. Grants from 50 to 500k. Loans in millions for scalable ventures. Low interest, long-term support, but longer application process. Back in 2023 alone, they gave out 6.4 billion kroner, but over 2 billion went untouched. And if I were you, I'd use that free money for marketing, even if my business was launched 9 years ago. So stick around, I will show you how smart founders do it all the time. Again, let's line up things on order. First, you can start with a fast loan from Nordea or Qred to get yourself moving. Then apply for a grant from Innovation Norway to scale. Some lenders even prefer this approach because it shows planning, initiative, and low risk. And yes, you can apply to all of them online. We placed all their official links in the video description. Now, let's discuss what truly makes or breaks your application, a detail many people often overlook. 1. A clear business plan. Define what you sell, who your customers are, and how you generate revenue. 2. Company registration documents. Ensure all necessary paperwork is in order. 3. Financial projections. Include your anticipated income, expenses, and profit forecasts. 4. Collateral or personal guarantee. Be prepared to provide security for the loan. 5. A solid credit history. If your credit isn't perfect, be prepared to explain any issues. Combine those 5 elements together, and you won't just look ready, you are ready. And if you get rejected, take notes, ask why, tweak, and try again. Smart founders don't just try once, they keep showing up for bigger sums, better each time. This is Wealth Road, and if you want to know more about how to escape your loans, make sure you subscribe. Goodbye.